Hello everyone and welcome to the channel. Today we are going to analyze one of the most important milestones in Tesla's history, reducing the cost per vehicle below $35,000. But first of all, what you are seeing right now on the screen is a dynamic graph generated from the image displayed on the screen. This graph will help us clearly and simply visualize how Tesla's cost per unit has evolved and what this means for the company and investors. If you like financial content explained visually, don't forget to subscribe and turn on notifications so you don't miss upcoming analyses. Let's get into the video. Tesla has achieved what many considered impossible, producing vehicles at an average cost of less than $35,000. How has it done this? Primarily through a reduction in raw material costs, which has significantly decreased production expenses. But this is not just a matter of cost reduction, it is also about strategy. Tesla has worked for years to make its supply chain more efficient and has optimized its manufacturing processes to achieve this milestone. To put this in perspective, a few years ago, producing a Tesla was considerably more expensive, limiting the accessibility of its vehicles. Now, with this cost reduction, the company has the opportunity to expand its market and reach more consumers, which is undoubtedly key to its long-term growth strategy. Another key part of this strategy has been the advancement in its factories, especially the gigafactories in Shanghai and Berlin. These plants have implemented state-of-the-art manufacturing processes that have improved efficiency and reduced operational costs. Additionally, Tesla has focused on vertical integration in its production, allowing it greater control over the supply chain. The reduction in costs has also enabled Tesla to compete with traditional electric vehicle manufacturers. Companies like Ford, GM, and Volkswagen are investing huge amounts of money in developing their own lines of electric vehicles, but Tesla's cost advantage gives it a privileged position in the global market. Tesla has also optimized its material usage and reduced production waste, thanks to its focus on modular design and energy efficiency. This not only lowers costs but also reinforces its commitment to sustainability, a key factor in its value proposition. Additionally, Tesla has significantly reduced battery costs, which represent one of the biggest expenses in electric vehicle manufacturing. Its constant investment in the development and improvement of battery technology allows it to continue reducing costs and improving the range of its vehicles, strengthening its competitiveness in the sector. One of the most interesting points revealed in our analysis is how Tesla has been leaving behind its label as an automotive company. Yes, it still sells electric cars, but it is becoming less and less dependent on this source of revenue. Look at this part of the graph. In 2023, revenue from energy generation and storage represented only 15% of the total. Today, in 2024, that figure has increased to 21%. A growth of 67% in the energy sector and 27% in services. This change is significant because Tesla is diversifying its business intelligently. Instead of relying exclusively on car sales, it is expanding its presence in sectors like energy storage and technological services, where the growth opportunities are enormous. This expansion also gives Tesla a competitive advantage over other car manufacturers that depend solely on vehicle sales. By having multiple business lines, Tesla can better absorb any crisis in the automotive sector, making it more resilient to adverse economic cycles. The energy storage market is booming, and Tesla is well-positioned to capitalize on this growth. Its Powerwall and Megapack batteries are seeing increasing demand in industrial and residential sectors. The ability to store energy efficiently will be key to the global energy transition. Tesla is also exploring new opportunities in artificial intelligence and software. Its focus on autonomous driving and the development of advanced algorithms could open an entirely new market, with significant revenue potential in the future. As the industry moves toward fully autonomous vehicles, Tesla seeks to lead this transformation with its proprietary technology. Additionally, the company continues to invest in innovation, with plans to expand its sustainable mobility product line. In the coming years, it is expected to launch new versions of its current models and potentially enter other market segments, such as lower-cost vehicles to compete with emerging Chinese manufacturers. Another key aspect is the development of its fast-charging networks. Tesla has been a pioneer in building charging stations in multiple regions around the world, facilitating the adoption of electric vehicles and generating additional revenue through its infrastructure. Furthermore, the company is exploring partnerships with businesses and governments to expand its reach in the energy sector. With more countries promoting renewable energy initiatives, Tesla has the potential to become a key player in the transition to a more sustainable world. Tesla is also making strides in integrating AI-powered solutions into its vehicles and energy products. As artificial intelligence continues to evolve, Tesla's ability to harness this technology for self-driving, battery efficiency, and energy management could give it an even greater edge over competitors. Now, what does all this mean for investors? Tesla is becoming more competitive. Lowering the cost per vehicle means that Tesla can maintain healthy profit margins even if it decides to lower the price of its cars to compete in the market. More revenue outside the automotive sector. As we mentioned earlier, Tesla is expanding its revenue streams, which could protect it from the high competition in the electric vehicle sector. Greater scalability. By lowering costs, Tesla can produce more vehicles without significantly affecting its cost structure, putting it in an ideal position to continue growing without compromising its profitability. Of course, this does not mean there are no challenges. Competition in the electric vehicle sector continues to grow, with companies like Rivian, Lucid Motors, and Chinese manufacturers gaining ground. However, Tesla has demonstrated its ability to innovate and stay at the forefront of the industry. Tesla also faces regulatory challenges in different markets. In China, regulations on electric vehicle manufacturing and access to vehicle data could affect its expansion. In Europe, emissions regulations and new battery manufacturing rules could add additional costs. Despite these challenges, Tesla continues to invest in research and development to stay ahead. Its bet on autonomous driving and artificial intelligence could become its next major technological breakthrough, with revenue potential even greater than its current electric vehicle business. In summary, Tesla has achieved an impressive feat by reducing its cost per vehicle to under $35,000, making it more competitive and giving it more flexibility to continue growing. Additionally, its diversification into the energy and services sectors positions it as a company with a promising future beyond the automotive industry. Now I want to know your opinion. Do you think Tesla will establish itself as a tech company rather than just being seen as a car manufacturer? Or is it still too dependent on the automotive sector? Let me know in the comments. If you enjoyed this analysis, you can't miss my next video, where we analyze which pioneering neobank could generate high returns in emerging markets. Click the link to watch it. See you in the next video.